The money did not vanish. It came back. 5 days after Donald Trump won the 2024 presidential election, his son Donald Trump Jr. accepted a partner role at a little-known investment firm called 1789 Capital. On paper, it looked like private business. A fund buys stakes, startups grow, investors profit. But then the companies inside that fund began landing federal deals, military contracts, loans, classified access, and government-backed financing worth billions. That is the trap. The money did not go directly to the president's children. It moved into companies they were tied to. Those companies became more valuable. Their stakes became more valuable. And in one case, a shell company helped open the door to up to $1.6 billion in U.S. government-backed financing. Follow the structure, and the story stops looking like business. It starts looking like a machine. Before the second Trump term, Donald Trump Jr.'s estimated net worth was around $50 million. Eric Trump's was estimated near $40 million. Within 2 years, those figures were reported around $300 million and $400 million. The question is not whether startups can win contracts. They can. The question is timing. 1789 Capital, the fund where Don Jr. became a partner, began investing in companies that later received federal support at extraordinary speed. Some had little government history. Some had no major contracts. Some were suddenly inside sensitive military systems. That is where the pattern begins. Then one deal stood apart. It involved tungsten, Kazakhstan, a shell company, and a project that beat competing interests from China and Russia. According to the company's own investor materials filed with the SEC, senior U.S. officials helped secure it. That deal alone reached up to $1 billion. $6 billion. And it showed the basic architecture of the whole story. Private stakes, public power, federal backing, family proximity. The path began with Don Jr. and a financier named Omid Malik. By February 2025, both Trump brothers had become advisors to a company called Domino Holdings. Through that structure, they gained exposure to a U.S. construction company named Skyline Builders. But Skyline was not the end point. A shell company called American Ventures was used in the chain. Skyline then merged with Cove Kaz Capital, a mining company connected to a tungsten deposit in Kazakhstan. That metal matters. Tungsten is not just another raw material. It is used in armor-piercing ammunition, hypersonic weapons, and F-35 fighter jet engines. Whoever controls tungsten supply has leverage in modern defense. This was not about rocks. It was about power.
In August 2025, the Trump sons invested.
1 month later, Kazakhstan's president, Kassym-Jomart Tokayev, personally told President Trump that the project was being awarded to Cove Kaz Capital.
That meant the project moved ahead over rival interest from China and Russia.
The twist was buried in the paperwork. Cove Kaz's own investor presentation, filed with the SEC, said Donald Trump and Marco Rubio gave direct assistance. After that, the project was positioned for up to $1.6 billion in U.S. government-backed financing. This was not a normal startup story. A shell company helped connect private investors to a critical minerals project. The project involved defense supply chains. The financing carried U.S. government backing, and the president's sons had exposure to the structure before the deal was secured. That is not just profit. That is proximity turned into value. And once you see that structure, the rest of the deals start to rhyme. In July 2025, 1789 Capital invested in Hadrian Automation. Hadrian had been founded in 2020. Before that investment, it had no significant government contract record. 8 months later, the company won a $900 million Navy contract to build automated submarine factories. It also received an $80 million Army contract. That is $980 million. A company with no major federal footprint suddenly became a major military supplier after the fund connected to Don Jr. invested. That number does not prove wrongdoing by itself, but it makes the pattern impossible to ignore. Timing became the story. Then came Firehawk Aerospace. Its federal contract history was almost invisible. One contract appeared in 2022. After 1,789 invested, Firehawk began winning Air Force and Space Force deals worth $8.9 million. It also received a land gift in Oklahoma. Sometimes access is worth more than cash. Reflection AI shows that even more clearly. In 2025, 1789 Capital invested in the company. By May 2026, Reflection AI became one of only 8 artificial intelligence companies allowed to deploy inside classified Pentagon networks. That is not just a contract. That is entry into the military's most sensitive digital spaces. Then there was Anduril, a defense technology company building drones, autonomous weapon systems, and AI-powered surveillance towers. After 1789 invested in June 2025, Anduril won a $367 million border surveillance contract and a $23 million, $9 million Army deal. There was also a possible $20 billion Army consolidation deal in the works. That number is too large to casually count because it had not been finalized. But even without it, the track total was already climbing fast. Add the confirmed figures. $1.6 billion for the tungsten financing, $980 million for Hadrian, $8.9 million for Firehawk, $367 million for Anduril, and $23.9 million more from the Army. That reaches nearly $2.98 billion, and one loan had not yet been counted. The most direct case involved Vulcan Elements, a 3-year-old startup with about 30 employees. It makes rare earth magnets, which are essential for advanced weapons, electronics, and military systems. China dominates that industry. For years, both major U.S. political parties have wanted to reduce that dependence, so the idea of funding rare earth magnet production was not new. The method was the controversy. In August 2025, 1789 Capital invested in Vulcan Elements as part of a $65 million funding round. At the time, the company was valued around $200 million. 3 months later, the Pentagon approved a $620 million loan. This was not processed like an ordinary public finance deal. According to reporting by ProPublica, it went forward without competitive bids. Technical disclosures, normally used to judge whether a project is viable, were waived. Then came the pressure. The push reportedly came from Peter Navarro, Trump's senior trade advisor. Navarro was also a close personal friend of Don Jr. Don Jr. had visited him in prison, and Navarro dedicated his latest book to only a small circle of people. A Pentagon employee told ProPublica the instruction came from the White House. The message was direct. We have to get this done. Staff reportedly worked late nights for weeks to move the loan forward. Deals of that size often take months. After the Pentagon loan, Vulcan's valuation jumped from around $200 million to nearly $2 billion. That increase mattered to investors who already owned a piece. This was public risk, private upside, and the structure kept repeating elsewhere. Power US, a drone company both brothers invested in, won an Air Force contract in April 2026 to sell interceptor drones. The value was not disclosed. Another drone company, Unusual Machines, also sat inside the web. Don Jr. served as an advisor and held a financial stake. In October 2025, the company won what its own CEO called the largest government contract in company history. That amount was not disclosed either. Then Unusual Machines signed a $5 million supply deal with Power US. Government money could flow to Power US. Eric's investment could benefit. Don Jr.'s positions could benefit from more than one side. That is the loop. The contracts do not need to land in a personal bank account. They only need to increase the value of companies connected to the family. When a federal contract arrives, the company looks stronger. Investors market higher. Equity becomes more valuable. That is how influence becomes wealth without a suitcase changing hands. The counted total reaches roughly $3.6 billion when the $620 million Vulcan loan is added. That excludes the undisclosed Power US and Unusual Machines contracts. It excludes classified Pentagon access. It excludes the Oklahoma land gift. It excludes the possible $20 billion Anduril Army deal. The real number could be far larger. 1789 Capital was already managing about $3.5 billion in assets, with a stated goal of $10 billion. The more federal wins its companies collect, the stronger the fund looks to future investors. A fund does not need every company to become a giant. It only needs enough government validation to make the next investor believe the network works. And federal validation is powerful. A Pentagon loan can change a valuation. A Navy contract can change a company's future. Classified access can turn a startup into a strategic asset overnight. And when those companies sit inside a fund connected to the president's son, the old ethics questions start to look too small for the machine. So why is this legal? If a mid-level Navy contract worker owns stock in a company bidding on her own contract, she could lose her job and face criminal exposure. But the president's adult children sit outside many of those rules. No recusal requirement covers them. No clean wall stops the circle. No simple form captures the full value of access. That is the blind spot. The structure does not require a bribe. It does not require a bag of cash. It does not require a payment wired to a family member from a federal agency. It only requires investment before approval, proximity before value, and public action after private positioning. The defense market makes that even more powerful. These are not ordinary consumer startups waiting for customers. They are companies selling into national security, military logistics, drones, surveillance, classified networks, rare earth magnets, submarine factories, and critical minerals. Their biggest customer may be the government. Their biggest validator may be the Pentagon. Their biggest accelerator may be the White House. That is not a marketplace. That is a pressure system. And once that pressure system starts rewarding the right companies, wealth can appear without looking like corruption in the old-fashioned sense. No envelope, no offshore account, no direct contract to a Trump family company. Just a chain of stakes, advisors, funds, startups, loans, contracts, and valuations. Each link can be described as business. Together, they become something much harder to defend. The lesson is not that every company involved is fake, useless, or undeserving. Some may be working on real problems. Rare earth magnets matter. Tungsten matters. Drones matter. Submarine production matters. Artificial intelligence inside military systems matters. That is exactly why the conflict is so serious. When the products matter, the contracts matter more. When the contracts matter more, access becomes more valuable. And when access becomes more valuable, the people closest to power can turn proximity into a financial asset. That is the business model hiding in plain sight. The public sees a contract. Investors see a signal. The company sees a higher valuation. The fund sees a stronger portfolio. And the family connected to the fund sees wealth rise without the money ever needing to pass through the front door. That is why the first sentence matters. The money did not vanish. It came back. It came back as government-backed financing. It came back as military contracts. It came back as classified access, strategic minerals, defense startups, and valuations that multiplied after public power moved. The scandal is not only what was paid. The scandal is what became valuable after the government moved. The money does not need to vanish when power can make it reappear. It only has to come back wearing a flag.